Hey everyone, Dalton Grados with Grados Capital here to talk a little bit about fair value gaps. So hopefully this will be short and simple. And this is kind of a continuation from my last video talking about supply and demand zones. Um, and real quickly before we get into fair value gaps, I wanted to just show how powerful these supply and demand zones were today because today is Friday. We had a great trading day today. To be honest, it could have been a lot better though. I could have held my trades all day and really made a killing. So that's probably something I need to do better at. There's always something to improve on, but nevertheless, a good day. But if you go back and watch my previous video on supply and demand, you'll see these zones that we marked on the hourly chart. These are the same zones here on my TD charts. And so the same zones that were marked in the previous video, which you should probably go watch if you haven't, are marked here. We had this really prominent supply zone here in the middle, which was an area that was continuously tested, an area of consolidation, an area of consolidation over here. On the hourly chart, it showed much bigger. See here, it's a big range here. We zoomed in on the 5-minute because I wanted to show you how today's trades worked out, where again with the same supply zone, we had the kind of this overnight high area over here, testing this supply zone. This morning broke that area and had a massive rally, but if you didn't catch this rally, it was okay because we literally came all the way back down. And where did we bounce? Right at the bottom of our supply zone and then rocketed up the rest of the day and then targeted this demand zone. And then in the afternoon had even a little short squeeze even further past it. So literally trading today, it was amazing because we called this bounce here. We're like, oh, it's bouncing at the bottom of supply. Got into some longs around this area. Actually, it might have been a little bit higher up. We didn't get the best entry, but it was okay. It was still okay because we knew the direction we were going. So we got entered like around up here, and then it absolutely took off. If you held this on the Nasdaq, over 300 handles, which is just absurd. Anyway, so if you haven't watched supply and demand video, that was my previous video, go ahead and watch that. Let's go ahead and discuss fair value gaps. Now, this is going to be pretty quick and simple. So the market leaves gaps or inefficiencies, and the more you understand and see these happen, the more you're going to start to realize that price action is not random, as much as it can appear to be when you start gaining more understanding and observing things, you realize how precise it actually is. So again, similar to supply and demand, this happens on any time frame and with any instrument. I'm on a NASDAQ 5-minute here. You can do this on hourly, daily, whatever the case. But the market leaves gaps. And of course, when we look at this chart, we're looking at a completed chart right now. The market is closed. But of course, our price, we read them left to right, right? So you have to almost imagine this as it's happening, right? So even if I scroll in a little bit here. Okay, so gaps, fair value gaps, are simply just areas of price that have been untested. There is a gap that was traded through and not priced in. And so it leaves an area, an inefficiency in the market that is likely to be retested when we come back to that area. So, if we can identify a few here on the 5-minute. So right here, even if I scroll a little back, because we have to imagine these candles as they're happening, right? Okay. So we have this jump here. So from this wick here all the way up to there, this wick, is a fair value gap in this 5-minute bar. Because this is an area that goes untested, again, going left to right, right? We shoot up here, we shoot straight up here. All of a sudden, this area goes untested. We actually, if you look at the wick on this candle, shoot all the way up here, and then this candle comes. So this wick goes all the way up here, comes back down, closes here. This next candle goes here and here, back where this previous candle was before on the wick, right? The price was up here. This candle's going up. So that's why this is not a gap here, but this is, because at the time of the candle printing, it was not traded back through. You understand, this range, it just went once through that area. It did not come back and price in those levels, which is an area of inefficiency that the market will likely retest. And look at how it did it perfectly. Look, we come up, we come down, we're coming down to retest. Boom, we're pricing in this gap, come back up. Then you have, look at the wicks on these candles. They come back in and price in that fair value gap before launching higher. Isn't that something? So the market is clearly now we see we're having an uptrend. But if you're trading this, you have this gap, you have this gap. This is where a lot of traders are getting FOMO, right? Because the market's just rocketing. Oh, I got to get in. Well, you can wait, because the market will probably come back and price in this gap area. Clearly, it did just that, with especially these wicks, right? So you see price come in this area, it's wicking above. We're seeing it price in and reject and close higher. This is a good area to get in the trade. If you were late, if you didn't catch this, you can wait for it to retest to fill the gap, catch this big move up here. Pretty powerful stuff. Okay, another gap. Again, we're gonna go to real time. Is this area? Price is coming down. It trades through this here, and yeah, it doesn't really. The next candle, the wick only comes up to there, right? So that area is a gap. What do? Price is coming down. Price is coming up. Still doesn't really fill in the fair value gap up there. Keeps coming down. So when are we going to retest and fill that gap? Look at that. Look how price unfolded there. Came in, filled the gap partially, rejected, came back down, priced in this level perfectly. And this happens, of course, on much larger time frames too. You can mark out big gaps in price, like on the daily time frame and even the weekly time frame. But you can even do this stuff intraday. This is a 5-minute. So anyway, I didn't want to make this video too long, but that's a bit about fair value gaps. Anytime you have a gap like that, an area that trades through that's untested, the market will come back and price in those levels. There's inefficiencies there. There's orders that are hanging there. There's liquidity that needs to be grabbed there. And that's what it'll do. So, please like this video, comment below, and subscribe to the channel. You can also follow me on Twitter and everything. Links are below. And hope this was beneficial.